Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your cannabis business podcast. They say divine timing is a thing, and so when buying a cannabis stock, I can't imagine it's any different. People tend to buy high and sell low, and that's sort of the opposite of what you're supposed to do. So how are you supposed to know when to buy a cannabis stock? Cannabis that jumps to a major stock exchange. Dollar cost averaging is probably your best bet if you just throw in $5 a week or $100 a week or whatever it is. That way you're buying on the ups, you're buying on the downs. That way it's not an emotional decision. You're just kind of putting money in on a regular basis and then do that with an index. I think the ETF Alternative Harvest Index was up almost 50% from year to date. There's a couple other exchange traded funds that's sort of a portfolio of individual stocks. And so you're not subject to just one security, but a whole basket of equity. Cronos Group has soared nearly 10,000 in less than 3 years. It's significant because it was the first Canadian cannabis stock to make the leap to a major U.S. stock exchange, which only began trading on the NASDAQ in February 2018. And then in May of last year, Canopy became the first cannabis company to trade on the New York Stock Exchange. The first day of trading was unimpressive to say the least. The stock fell 6%, and short-sighted critics concluded that cannabis stocks were not ready for the big time. And just 6 months later, Canopy has more than doubled, jumping to a major U.S. stock exchange woke up the big investors just like it did with Cronos. And yet many cannabis growers have hardly had any revenue, and their product is still illegal at the most desirable markets in the U.S. That's not stopping investors and corporate giants from spending billions of dollars to take their stakes in these companies. They obviously see growth potential, and yet the question remains, how do you even value a cannabis business? Altria Group, a U.S. tobacco leader and maker of Marlboro cigarettes, announced in December that it was buying a 45% stake in Cronos, one of Canada's growing number of cannabis producers and among the industry's high-flying stocks. The $1.8 billion transaction left us wondering, how did Altria determine that price? After all, in the period before the deal, Cronos generated sales of less than $4 billion. The dynamics were the same when Constellation Brands, a beer liquor conglomerate, spent $3.8 billion to increase its stake in Canopy Growth Corp earlier in 2018. Canopy's CEO said he wants it to become the Google of cannabis, but he'll need to add a few more digits to its sales figures. It's tricky to gauge the worth of an asset that will be potentially highly valuable down the road, but are difficult to quantify just yet. Looking at other industries where this has been the case is helpful. Even if their businesses aren't perfect comparisons, the method of valuing them can be instructive. So take the natural resource space where the focus is often non-financial metrics. They include production capacity and tangible assets such as proved oil reserves. And then a better comparison for cannabis may be the biotechnology space, where deals for drug developers involve big, risky bets on future potential blockbusters. This market will be far more expansive than simply selling a box of joints. There's an opportunity to create all sorts of consumer products, and the marketing can vary widely from wellness drinks and beauty-infused items with cannabidiol to sin products like cannabis-infused edibles or something more akin to having a glass of wine. Knowing the important role that brand building will play in the next phase of the cannabis industry growth story is useful to study these companies' senior management teams and look for branding and retail pedigree. It's a good sign that Cronos' head of marketing had stints at PepsiCo and that Tilray is one-time Starbucks Corp executive running the retail strategy. Wherever it's sold, if the cannabis business is to grow as big as the industry's bulls hope, it's going to have to successfully court non-users and infrequent users. That's where newer innovations such as edibles and beauty items may be more important than smokable products. The companies that have breakout stars in the legend cannabis era will be the ones that have a vision for how to create demand for product goods, whether through curiosity-inducing products, a great in-store experience, or alluring marketing. When a cannabis company files an initial public offering or IPO, they want to be aware of short sellers after the certain time period ends, and short sellers are able to hypothecate shares and bet against a company. That's obviously detrimental to a company that can force share prices to go up and then plummet really quick, creating what's called a pump and dump or other fraudulent activities. Most recently, we saw Ascent Industries having to file protection against their shareholders, but that was because of a lawsuit. And then there was another issue with Afria. There were shareholders that wanted to short it because of some fraudulent activities, or what seemed to be fraudulent in South America, Latin America. They were buying properties in the millions of dollars when those when that collateral was really only worth $50,000, $60,000. And so the extra $500 million was apparently going back in the pockets of the owners. And so you have a lot of risks as an investor. But as a business owner, you also need to protect yourself against short sellers who could come up with false reports and plummet your company. And so something to think about when you're filing a reverse takeover or an IPO up in Canada to seek access and capital, you need to be aware of short sellers who can bet against you. So that comes in the form of hypothecating shares. They buy those and then they bet against the company. All legit, all legal. So short sellers are betting heavily against the rapidly growing cannabis sector, especially the stocks of major players in the Canadian cannabis industry. So a couple of things to consider with shares of Afria, for example, they fell more than 25% in one December day because of a critical report that came from a company. And the two short sellers claim that the Ontario company that's controlled by insiders raiding the company coffers to line their own pockets, which they claim to be malicious. And then shares of Kronos Group dropped nearly 30% last August after short sellers filed a report that it alleged was a reality check for the Ontario firm. The short sellers profited from the transaction by buying the stock back at a lower price and then pocketing the difference. So in effect, the short seller is gambling that the borrowed stock will fall after it's been sold so that it can be recouped at a bargain price. Shares of publicly traded cannabis companies are natural prey for short sellers, so they must be transparent with investors and the general public by law. So you have to keep your financial house in order, and businesses have to stay ahead of the bad news in order to offset any financial dealings with short sellers. And with that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.